All right, welcome to the daily market recap for Wednesday, August 27th. In this video, we'll be taking a look at the action today of the indexes, liquid leaders, industry ETFs, then end the video with long and short setups like we do with every daily recap. So if you guys enjoyed the video, please leave a like and subscribe to my channel. And if you want my market takes throughout the trading day, along with a live stream at the market open, you can sign up for the Discord using the link below. Getting into it, we'll start with the indexes. The main story today was NVIDIA reporting earnings down just about 2.5%, 3%. But we'll get to that in the leaders section. NASDAQ, good day. Higher highs, higher lows, still over all the key moving averages, down just a little bit after hours. Overall, I guess we'll see how the market responds to that minor gap down that we're getting. But overall, I really like the action here. S&P 500, new closing all-time high. Can't hate that action. Very bullish. Any kind of gap down, you've got the last 2 days low right at the 10-day EMA. Pull back to the 20-day or even the gap zone around 635, I think would be fine. IWO, we continue to see rotation from kind of mega cap tech stocks to the rest of the market, which is completely healthy. IWO is the growth stocks of the Russell 2000. Today, we saw higher highs, higher lows, open on the low of the day, close right near the high of the day, and now pushing out after that, basically a 2-day consolidation after Friday's explosion higher. ARKK, another tightening up day on the 5, the 10, the 20-day moving averages. This looks really nice if we do get like a quick shakeout of the 20-day moving average and then take out this pivot. I mean, we've consolidated enough. We've tested the 50-day moving average, got nice and tight there. We should see some directional action here shortly. And then looking at IBIT as a comparison for Bitcoin, higher highs, higher lows today. The bid or the sell-off caught a bid right at the previous kind of breakout point, which for that is healthy. Still don't love how we made new highs and immediately sold off there. But overall, this chart isn't broken in my eyes. It was just kind of like a breakout retest. If we do violate the lows from Monday, that would be a little concerning to me. Not a little concerning, that would be pretty concerning to me. Jumping to the leaders list, let's just start with NVIDIA. Today, coming into the earnings event, bounced off the find the 10-day moving average, closed right at highs. Let me switch this to like a 1 hour chart so we could see the after hours move. And you can see overall, like really not that bad, not even to the lows of the last couple days. Undercut the support gap, rallied up a little bit, but trading at right around 176. To me, kind of a nothing report where I think the expected move was like 6%, 6 or 7%, and we only got 2 or 3%. So anyone who sold options made money on that. How we handle this little gap down will be pretty interesting. We do have multiple support gaps here and the 50-day moving average, which we haven't tested the entire rally up. So even if we like pull back into that area, that would be a spot that I'd be more interested to buy. Um, but if we gap down and we see selling accelerate, that would be a little surprising to me. But we'll see how tomorrow goes. The rest of the leaders, MP, great action. We had that uppercut and fail of the resistance gap yesterday after a good move on Monday. Today, just consolidation, closed back over the 5 and the 10-day moving averages. Retest of that 20-day will be pretty interesting in a spot that I'm watching. BE continues to be the best stock in the market. Just riding the 5-day EMA on extensions, pull back to the 10-day EMA, get supported at the 10-day and support gaps. But overall, just a monster chart, monster stock. Definitely one to go through and study. ALAB continues to tighten up over the HVC, the high volume close from its own earnings. Had that shakeout last week, rallied in the resistance gap, and now just kind of like tightening up. If we do see some weakness in NVIDIA and the rest of the market, seeing how it holds the HVC now on a potential higher low pullback will be spot to watch. Uber closed at the low of the day, right under the 5-day moving average, but just extremely light volume on that consolidation day. Pull back to the 10-day moving average and gap zone is a spot that I'll be watching. SOFI, another low volume red day, but still over the 5-day EMA or right at it. Until we close under the 5 day or we see a volume pickup to the downside, I still think this is completely healthy action. We had a really strong 4 day move. We can measure that really quickly. So from the lows on, was that Thursday? We had a 25% move in SOFI. So the fact that it's just pulling back to the 5 day moving average on declining volume, that's extremely bullish to me. FUTU, a lot of Chinese names were weak today, and thankfully FUTU, like although it was down 3.1%, it had a quick wick lower right at the open under the 10 day moving average and support gap, closed back above that area. I I keep going back and forth whether I should even have gap zones on here because things that trade on other exchanges, the gap zones are not nearly as important. But price structure wise, we came back into the breakout point. So a breakout retest immediately found buying support and reclaimed the 10 day moving average. So even though a lot of Chinese names were pretty weak today and FUTU was red, I do like the action of this quick 3 day pullback to the breakout point. Reddit tried this right at the open over yesterday's high, ran into the resistance gap, reversed lower, and I got stopped out. Now looking at it, I do so much better when I buy on weakness at a key moving average, a shakeout, a support gap, something like that. I almost just want to stop buying breakouts. But this was one of the few stocks that gapped up on earnings and actually had an accumulation period. So pull back to the 20 day bounce and then tight price action. I don't hate that I took that trade, but I could see why it failed. And I probably shouldn't have taken it. And then finally, Robinhood. A lot of weakness today in Robinhood, losing the key moving averages after yesterday. I really thought the shakeout under Monday's low and strong close could propel us higher, but we never took out yesterday's high, which was the spot that I was looking to actually buy the stock at. Instead, we reversed lower, took out yesterday's low, closed on the low of the day on an uptick in volume. So this is another name that hasn't even tested the 50 day moving average. So pull back into that area, into these two support gap zones, which we've seen supported a couple other times, would be a spot to watch for me. Jumping into the industry ETFs, the big one was retail. And this sneaky has made a new, maybe not all time high. No, not all time high, but 52-week high for the year. Multiple gap ups after this test and shake of the 50 day moving average. Just one, two, three, four, five gap ups, and volume starting to pick up as well. I know we had like 3 day stretch here where volume was heavy, and that was concerning. But you followed that with multiple gap ups and new price highs, so can't be too mad about that. Couple of the names that reported this morning were ANF, and you could tell this isn't a chart that I've looked at in a while. Gap down, did find support at, that's not even gap, but did find some support, reclaimed the 50 day moving average, still closed down on the day. And then the other one was Coles, right? Yeah. Coles was up 23%, decent closing range, and now is 250% off the low. Is that 150%? 150% off the lows. So some retail names actually like are acting pretty well recently. Cybersecurity, this is gapping down a little bit with CrowdStrike, but I know CrowdStrike actually reclaimed a lot of that move down after earnings. Up 1.2% today, little gap up, kind of coming into the first test of the 50 day moving average. Then where you would look for a higher low and to build out this base. But I don't hate overall what this group is doing. It's just base building. But in base building, you have a lot of choppy action out of some of the stocks. So if you're trying to trade cybersecurity stocks, like lately, it's probably been a nightmare. But now that it kind of seems like we're rounding out the bottom of this, now it's time to look for the leaders in the group for some lower risk entry points. I'm not going to go through all these. I know I'm touching on the top three. XLE really starting to pick up here, back through the 200 day moving average. Retested it yesterday, now pushing back higher. So another group that's starting to join the rally. Um, MSOS, still one of my main focuses on a pullback here. This is the cannabis ETF. Rallied from $2 up to $5.25, pulled into the 10-day moving average and started going again. Just looking for a retest of that $5 area, the 10-day moving average, and the gap zone on that. Biotech, good day, higher highs, higher lows, reclaiming that 5-day moving average, and still don't love the candle that we got on Monday. I'm still in the LABU on the long side. Hopefully, that was just kind of like a shakeout, a higher low, and we're continuing to build here. I haven't sold any of the position yet, so really hope that's the case, but we'll see. Um, the other one, there's two other that I wanted to talk about. XLF, new closing high, all time, which is not bearish. And then well, let's talk about KWeb. Gap down today. Baba reports earnings on Friday. I don't love this action, but still, it could just be another higher low in the base right at the breakout point. So kind of one last shakeout before hopefully Baba crushes it on earnings. I do have a position in FUTU. I do have a position in the leverage version of this called CWEB. So today wasn't super fun for me, but I don't hate the action off the open. Close near the high of the day. And if we can get back over the 10 and the 5 and let Baba do its thing, it'll be fine. Jumping into the long setups for the day, we'll just sort this by dollar volume. So most liquid first, then least liquid on the bottom. Uber kind of touched on this. Just looking for a pullback, undercut of the 10-day moving average, undercut yesterday's low, and this gap zone at 94.24. Reclaiming that area would be buyable versus the 20-day moving average. ALAB, really like one of my main focuses tomorrow is if NVIDIA flushes a little bit in the morning, we could see a pullback into the HBC from its earnings. That would be buyable versus the 20-day. It's a little bit wide there. So ideally, like we can kind of undercut this and the low of the pullback here, or the low of the most recent pullback. I mean, and then we could get like a tighter risk entry to that 20-day. DoorDash, I was stalking this one today. It came into the 50-day, but didn't undercut the support gap, so I didn't put the trade on. Just another spot that I'm watching for. Like actually undercut the 50-day, actually undercut the low of the support gap, reclaim that. That would be the buy point. Stop would be probably like 2% on that. MP, really like the action today. Still think that this can continue to consolidate, put in a higher low overall, but still undercut the 20-day moving average and the two gap zones here at 67.40. That would be the buy point versus the low of the pullback at 64.85. TEM, definitely a name that you don't want to chase higher. It makes some pretty linear moves like very quickly, but as quickly as it goes up, it does kind of has the tendency to shake out as well. We got into the resistance gap, reversed there, kind of followed through on Monday, tight day, and then followed through again to the downside today, but very little volume and volume drying up on that sell-off. I'm looking for either a gap down reclaim of the low of the day as a buy point or a gap up opening range break buy versus the low here. Similar to the idea with RBRK, which I'll just jump to. I bought this today on the opening range break. It's a name that was the first to bottom back in April, first to make a 100% move, then first to kind of correct. And it's not in the strongest group with cybersecurity and software, but it's one of the names that are holding up extremely well and already like looking like it's working on the right side of the base. Good shakeout on the 20th, rallied up here. Um, Looked like it was about to take off. So like there was a couple pivots that people could buy on strength here. We did get a reversal because the group just I don't think the bases are ready overall for the theme. But I love an ugly close under key moving averages followed by a gap up. Outside of a support gap undercut and reclaim, it's my favorite setup because anyone who did get stopped out here doesn't want to buy a gap up the next day. So it usually will gap up, trade tight, or kind of run. I was hoping it would run a little bit more than it did, but then trade tight, and then you have a higher pivot to buy off of, and you're already in at a lower price, so better risk reward. Through for this one, either looking for an undercut of the gap zone and then a reclaim. Overall, that would still be a higher low. So on market weakness, looking for that area. On market strength, through today's high, stop at yesterday's low is the play. Another software security name, Net. Probably should have bought this yesterday through the 10 and the 20-day moving average. Pushed out great today. Now we're just looking for a retest of that area. Undercut $200, the gap zone, the 10 and the 20-day EMAs right at 198.65. Reclaim of that is buyable versus the 50-day moving average. WULF, monster stock off the lows here from $2 up to, I guess it went to 1060, but huge move on earnings, 60%, highest volume ever, closed at the high of the day, and really just consolidating from this point on. Really tight action today on declining volume, just below this minor resistance gap. Looking for a break of today's high as a buy point versus today's low as the stop. We'll play this as momentum name. Secondary option is on market weakness, pulling into the HVC is buyable versus the 10-day moving average and the low of the pullback. Celsius, this was on the watch list yesterday. Continue to watch for an undercut of the gap zone below the 10-day. Another name like Reddit that very few names gap up and then accelerated to the upside after earnings. This is one of the few, so I want to keep this on my radar. Also has already run from 20 to 60, so a 200% move off the low. And I don't see a lot of people talking about Celsius yet. So I still think a pullback into this gap zone is probably a good spot to manage risk against. This was on my watch list, like coming into this pivot. Again, I do poorly when I try to buy stuff on strength. It sometimes it works great, but sometimes you get a bar like this. What I really love about this is this looked like the chart was going to fall apart on August 19th, down 18% on a huge pickup in volume. We got one tight day and then gap up, gap up. We take out the high of that kind of kill bar. Pretty tight consolidation day at highs, another gap up, an extension. Now we're just looking for a pullback undercut of the support gap, 5-day moving average, as a potential buy point to the 10-day where my stop would be. SEDG, I think this is the leader in solar stocks. All the solar stocks kind of trade kind of weird. So it's not something that I would put a super large position on, but we do have a nice flag at the 5-day moving average. Open on the low today, closed near the high. Just through today's high is buyable. Stop would be the low of this little flag. Maybe give it to the 10-day moving average. But solar stocks as a whole, I still think are a theme to focus on in the second half of this year. And SEDG is one of the few that are above the 5-day and are holding up really well. Finally, PGY. I know this is the thinnest, still $120 million shares, and a really, really clean pivot here at $35. So I know I don't usually buy stuff on strength, but holding the 5-day moving average, a great shakeout today to the 10-day, kind of clearing out anyone buying too late. And now this looks ready to get going, especially because we're more likely to have a gap down tomorrow with NVIDIA's earnings. A little gap down, and this shows strength. If NVIDIA can find buying support after whatever morning shakeout, really nice look at $35 here. Now to the short setups. First one is MSTR. Continues to just bear flag and act weaker than Bitcoin overall. Had one day where we closed back over the 200-day moving average, and we immediately gapped down from that point, which is a very bearish signal. We're trading tight under that resistance gap right now, and then closed on the low today. Couple different areas. If Bitcoin does like continue to run, I would love this to rally up into the 200-day, into the resistance gap, and just uppercut and fail. I would add to my short there, or just through today's low and kind of shorting on momentum, especially if NVIDIA kind of pulls down the rest of the market. I don't think it's going to do that, but if it does, then you have one of the weakest names in the market in MSTR as a potential short here. Hims once again failed right at that resistance gap on the uppercut of that zone in the 10-day moving average, closed at the low of the day. I- Similar to MSTR, I would be fine with another rally up into that area as a potential short. Even like eventually a rally up to the 20-day, I think that would might be better. But if the market is going to start to feel heavy, this is a name that's already started to break down and trapped a lot of people on its earnings candle, like I covered in other videos, where I wouldn't be surprised if this is just like a short bear flag and we pull back into the 200-day and kind of undercut that next. So resistance gap on market strength through today's low on market weakness is the play there. SBET, very, very tight action. You can play this to the long side on strength. You can play this to the short side on weakness. I don't think either one is fine as long as you're using a stop on this. For me, just through today's low, through the 50-day moving average is a potential entry. Stop would be today's high. ARM, I tried to get in this name short on Tuesday on like the rally into the resistance gap. Didn't get enough profit cushion, so I took it off on at the close. And the hope was I would get that resistance gap on Tuesday. We would have a weak market today, and then I would have some profit cushion to hold into NVIDIA's event. Um, Unfortunately, did not get that positioning right. Now it's gapping down a little bit. So just looking for another kind of test of that resistance gap, 20-day EMA, and another lower high in the downtrend here as a potential short. A couple quantum names were actually pretty strong. RGTI, really impressive, but QBTS and QUBT are two that I think are really running out of steam. QBTS, another uppercut and fail the resistance gap, got to the 10-day moving average, closed near the low of the day. Just on weakness through today's low is the short there. QUBT, same thing, closed at the low of the day, actually down, what was it, 2.76%. This one really is starting to feel heavy and has already run like from $4 up to $22 in the secondary push here, but lower highs all the way down, multiple gap downs. We've held this support gap here, but if that cracks, then this has a very quick move down to the 200-day moving average. Another name that just through today's low, I would look to short. SEZL and Root are two very similar setups. We have the big gap down on earnings. We just go sideways, and now a breakthrough today's low would be the short. Stop would be today's high and the 10-day moving average. So kind of like an inverse gap flag or whatever you want to call it, where you gap up, you consolidate, and then you rip higher. We've gapped down, we've consolidated, haven't really bounced with the market. And if we do get start to feel some heaviness in the market through today's low is the short. Root, same thing, lost 26% on earnings, has not been able to bounce since a couple uppercuts of this resistance gap. Now we're right kind of near the lows here, just through today's low, stop at today's high. DFDV, another name that had a really nice speculative run early on in May, but then lower high, gap down, lower high, big move up, followed by a massive gap down, just trapping more buyers at these higher prices will give you a lot of selling pressure on the way down. Today we gapped up, opened on the high, closed on the low, just showing how weak the stock is overall. So just through today's low as a continuation play is the entry there. And then PDYN looking for an uppercut of the resistance gap at 823 here. We had a successful test of the 200-day, so it's not too bearish, but now you have the 50-day curling over. We have a test of the 20-day, which we weren't able to get through twice now, and that resistance gap. So little uppercut of 822 and fail. That would be the entry. Stop would be probably like 2 or 3%. I wouldn't want to give it all the way to the 50-day moving average on this one. So that's going to be the daily market recap for Wednesday, August 27th. So far, we've survived the NVIDIA earnings, even though it wasn't ideal with a small gap down. We had some good reactions. Snowflake, I mean, that was up about 14%. PSTG, another gap up. So we'll see what tomorrow brings. Overall, I don't think it's too much to worry about. Tomorrow we'll also get NAAIM exposure update, so that'll be interesting as well. See you guys in tomorrow's video. Make sure you like and subscribe. Take care.